What's going on, traders? Few things to discuss. It's going to be a pretty decent video. We're going to go over the SPY, triple Qs, quant data, Discord. We're going to go over a few things. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So right now we're looking at the SPY, and something we talked about in the last video is how the SPY has yet to retest its depth cross. We also talked about triple Qs already retesting the depth cross. You see here that we're at the 200 MA. Hopefully you guys can see this. I know there's a lot going on, but we see here that the triple Qs is retesting the 200 MA, and we're having somewhat of a hard time breaking above it. We got as high as about 492, 493, and we ended up rejecting from there. So we continue to see the triple Qs reject the 200 MA. But if we look at the SPY here, the SPY hasn't touched the 200 MA, but we are rejecting a key level here. I think it goes without saying 570 is your key level. Not only 570, but you're also looking at 567. So we rejected not only 570, but we rejected 567 as well. And I said in the Discord earlier that if we continue, if bulls cannot break us out of here but above 570, that at some point they're going to get exhausted, they're going to give up, and then they're probably going to try again later. So there is still a potential scenario where we do see a little bit more upside. Now, something else we talked about, right, is the potential for us to retest this double top neckline on the SPY. We're looking at the weekly time frame here. And so if we, mark it out, we see that we have a top here, another top here, and then we have our neckline right here at around 575. So we're getting pretty close to that area where I do think it's very much possible that we see some type of rejection, right? Between 575, 576, somewhere around this range before we see the market pretty much sell off. Now, it's not to say that we can't reject from here. We very much can just reject from here and head towards the downside, but I'm still going to stick by what I've been saying before. I do believe sometime in May, the market is going to rug pull everyone, and we're going to see either an even low, such as a double bottom, so a scenario like this where we create some type of double bottom, or we start filling those gaps towards the downside. Let's go to a daily time frame. We fill these gaps to the downside at around 530, potentially a little bit lower around 525, and then we bounce back towards the upside, creating somewhat of a higher low. We'll have a low here, higher low here, and then this gap fill, if we bounce from this gap fill, we'll create another higher low here. So that is what I'm looking at right now if we're talking about a bullish scenario. Right now I'm looking at a potential retest of not only the daily 200 MA at around 572, 573 range, but also a potential retest of this double top neckline right about here at around 575, 576. That's the bullish scenario, okay? Again, that's the bullish scenario. That's for you thumbnail warriors that don't listen to the video but just pay attention to the thumbnails. Now, if we're talking about the bear scenario, it goes without saying, right? We already talked about it. We can either reject from here because we can't get above 567 and hold, and we can't hold above 570 as well. We either reject from here and we start heading back towards the downside and possibly head back towards 555, and 555 is a very key level. We break below 555 and hold, we're looking at a move towards 550, and then from there I will be looking for a break and hold below 550, and then from there you're looking at a move as low as 544. Okay, 544. After 544, if you manage to break below 544, you're looking at a move between 542, 540, and then if you manage to get below 537, then you are pretty illiquid and you're looking at a move all the way towards the gap fill at around 530. That is the bearish scenario. So, in conclusion, when it comes to the SPY, we are looking at a potential move still, as long as we hold 565, we are looking at a potential move back towards 570, between 570, 575, right around between the daily 200 MA and the double top neckline. And then we reject from there. All right. I don't see a world just yet on us pumping past the double top neckline. It's very much possible. I'm just not seeing it yet. We'll have to wait and see. It's also important to note that bears are very, very much present here. Let's get rid of all of this. I think you guys get the idea. Don't want to hurt your eyes, but I think we can tell, or at least by now you should be able to tell, that bears are extremely present in this area here. Bearish candle, bearish candle, bearish candle, bearish candle, a toddler, bearish candle, bearish candle. So you're seeing bears all in this area, and right now they're just feasting on this Pomeranian right here, okay? But ultimately, it's going to be very, very tough for us to break out of here. So for us to be screaming all-time highs while this is existing, while all of this is in play, is kind of crazy to me. Okay, it's kind of crazy. Not only that, but when we're looking at the economic data, Jerome Powell was extremely hawkish. Yes, we got great tariff news and everything like that, and it seems like that's the catalyst that the market really cares about right now. But if we continue to ignore what Jerome Powell is saying, I think intermediate to long term, it's going to be a disaster. All right. Yesterday, Jerome Powell was extremely hawkish, like very hawkish. That was one of the worst Fed meetings I've ever witnessed, right? He was very hawkish. He was implying that stagflation is a thing. He was implying that there's no rate cuts for June. He was pretty much letting us know he has no idea what's going to happen. They're completely uncertain what's going to happen. They're just going to sit back and wait. Nothing about that sounded bullish. That's just my opinions. You guys let me know in the comments below. But right now, headlines are showing that markets are just ignoring Jerome Powell. I think that's just spells for a disaster. That's just me. Maybe I'm wrong. But ultimately, we see that obviously the market is, more caring about tariffs and interested in what Trump is going to do in regards to China, or China and Trump is going to do in regards to tariffs over the weekend. So obviously, it's a wait and see type of game. But yes, I would not trust this upside anymore, considering what Jerome Powell has said. Unless something new comes out, unless Trump just makes an amazing deal across the board when it comes to tariffs, because that's mainly one of the problems that the Fed is having, is that they don't know what Trump is going to do in regards to tariffs. So unless that happens, then we can start maybe talking about all-time highs. But for now, as long as we're in this range, I can't. It's very hard for me to be bullish right now. Okay, very hard. I'm going to give bullish scenarios, but as far as being under the 200 MA, that's overall bearish. When you're below the 200 MA, that's bearish. Okay, when you're above the 200 MA, that's bullish. So it's kind of crazy when people argue with me in the comments, and it's just like, brother, yes, we're pumping to the upside, but we're still below the overall trend, which is bearish. 200 MA has always implied where the market is going, right? Here, under the 200 MA, the market was bearish. Above the 200 MA, the market was bullish. So it's kind of crazy, right, that we're ignoring that main key factor that's been a common thing for years when it comes to trading, right? But as long as the market stays below the 200 MA, very hard for me to be bullish. As long as the SPY stays within this range of all these bears in this area, it's very hard for me to remain bullish, or not even remain bullish, but just talk about all-time highs, right? Because we're seeing that we're having a hard time breaking out of this area. All right, so it's right here. Okay, now let's move on. Let's talk about the triple Qs real quick. It goes without saying, we're looking at the same scenario, right? We got the double top, we got the neckline here at around 500. We talked about a potential move towards 500, 505. Not only that, but we talked about this multiple times. The 50 weekly MA, right? We are currently below it. We're having a hard time breaking above it. We saw, if we zoom in, we saw that we tried to get above it. We were really close, right? We got above it. We went to 493, and then once again we rejected from there. And so something we talked about plenty of times, if we were talking about more upside here, is one, this evening star pattern, which has very strong resistance at around, crazy enough, 493, right? And that's exactly where we rejected. Exactly where we rejected. So if we erase everything, whoop, what did I just do? I don't know what I just did. I erased all the indicators. That's crazy. But regardless, if we erase everything, right, boom, okay, you rejected the bottom half of the evening star pattern. That's exactly what the triple Qs rejected so far, right? So I talked about this, right? We talked about this evening star pattern plenty of times, right? How it holds very strong resistance. Not only that, but let's say we do pump higher. Okay, cool. We pump higher, we head towards 500, between 500, 505, maybe 510, 515 if we're being optimistic. But ultimately, you got a lot to deal with. Okay, you have a lot to deal with. Bears, 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 bears. Your pet Pomeranian with no legs. Bear, bear. Like, it's not looking too good in this area, okay? It's not looking safe to hold calls in this area. That's just me. Am I trading upside? Absolutely. I've alerted calls for like 2 weeks straight now, right? Nothing too crazy as in regards to profit, because every time we get a little bit of upside, it gets taken away, right? But ultimately, this is something you want to be cautious of. All right, do what you want at the end of the day. I would not I just would not hold any calls for too long while we're trading within the range of this evening star pattern. You saw what happened here, and we're trading in the range of the 50 MA as well. Not only the 50 MA, but the 200-day MA as well. Now, if we're talking about key levels here, your key level on the triple Qs is 485. You break below 485, you're pretty illiquid back down to 480, between 480 477, and then from there you're looking at a move as low as 466 467 if you manage to break below 477 on the triple Qs. Highest you can go is about 498 500, between 498 505. We're being optimistic, we're talking about 505 510. Now, interesting enough, I shared this in the Discord. You guys always talk about how I only share puts when it comes to quant data. Well, boom, here you go. May 30th, institutions loaded calls for May 30th, 505 strike for triple Qs, right? They were loaded at 491.53, so these guys are pretty much not in profit right now because triple Q's tanked after this. So yeah, interesting enough. And then the premium was 3.72 million. I'm sure no one's going to talk crap about this, but you guys always talk crap about the puts, so it's funny. But I imagine no one's going to say anything about how these guys are currently getting cooked. Now, do I think it's possible that triple Q's head higher? Yes, I do. But right now, still not too confident in that idea. We'll see. All right. But yeah, triple Qs, they loaded up 505 calls. I shared this in the Discord. And so far, it's not looking great. All right. Another thing I want you guys to look at here, for those of you who think this stuff doesn't work, so these SPY puts, right? These were loaded when SPY was at 568.40. This was loaded at 1:37 Eastern time. SPY puts July 31st, 2025, 566 strike. They were loaded at 568, and then they were at the ask and 1.33 million premium. Almost maybe an hour or two later, we saw the SPY tank, and now the SPY is at around 565 or closed at 565. So these guys, absolute bag they made, right? So this stuff works. It's just a matter of getting confirmation and, you know, not solely depending on this stuff, right? So again, I recommend you get an options chain. If you don't have an options chain, you are trading blind. That's just me. That's just my thought process when it comes to having an options chain. But ultimately, guys, I still think we're going to see a rug pull in the near future, sometime in May. Earliest, maybe June, you know, maybe early June. But ultimately, I do think we're going to see all-time highs. Or we're going to start heading towards all-time highs via the summertime. Okay, so we'll see. But ultimately, that's my thoughts when it comes to the SPY and the triple Qs. So another thing I want to discuss here is Bitcoin. So I made a whole video. I'm regretting making that video because it just alerted all the spam bots to come out and play, right? But Bitcoin, I talked to you guys about this. I made a whole video dedicated to Bitcoin. When I make a video dedicated to one particular stock, ETF, whatever it is, it hits every single time. I told you guys about Apple, right? Clear, just clean, okay? Absolute clean, right? I told you guys about Apple dumping. That thing went all the way to like 177, 175, and then I told you guys to start buying, or I said I'm going to start buying there. I made a video dedicated to Bitcoin. I told you guys that Bitcoin manages to break and hold above 95K. This thing is going to take off. And of course, a lot of you, you know, joked and laughed and everything and thought I was crazy. It's funny, when I'm bullish, I'm wrong. When I'm bearish, I'm wrong. You know, you guys are never satisfied. But regardless, Bitcoin looking really good. Okay, looking really good. I told you guys above 95K, this thing has the potential to see some astronomical levels, and it is still pumping as we speak. 102K, no, actually 103K is your next key level. If you don't believe me, you can look to the left. I tell you guys all the time, zoom out, look to the left. Boom, boom. A lot of turbulence in this area. So Bitcoin has a lot to deal with. We're on a daily time frame, so this is kind of off. But regardless, you're looking at 103K. You break above 103K, you're looking at a move towards 105K. And then from there, I mean, like I said in that Bitcoin video, feel free to rewatch it. Again, I regret making that video because all the crypto scammer bots just came out of nowhere. So I apologize about that. But Bitcoin can continue to head higher. We're looking at a potential move between 110K, 112K. All right, how that correlates with the market, I can't say for sure. But if it continues to pump, then I imagine that Bitcoin is going to be the leading indicator for the market, and the market is going to continue to pump, right? So we're not going to take that away. But yeah, 110K, 112K, as long as you stay above 100K on Bitcoin. New highs is definitely possible. So shout out to all the people that trolled on that video. You missed out. All right, you missed out. Congratulations to Discord members who took MSTR 400 calls as well. Absolute bag. We talked about that plenty of times. I mean, we saw the institutions were constantly loading up on that thing. So yeah, congratulations to Discord members on that. All right, so speaking of Discord, right? So here we talked about Bitcoin. So when it comes to our Discord bot, interesting enough, and I forgot to mention this in the last video. Hopefully I can find it. So here we're just going to go over a few plays that the Discord bots alerts and see how they turn out. So this was alerted for coin. For 516 is the expiration, and then you see here 3.16 million. This was alerted before earnings, so maybe coin pumps after earnings, and maybe this move that currently is happening for earnings is just a, just to shake out all the bulls. But interesting enough, today I believe there was triple Q calls, and there were 510 calls. I'm hoping I can find them. Bear with me, please. Here you got Apple calls 202.5. The premium is really low. These are plays that a lot of you say I don't alert, or I don't alert enough, and here you go. So something we talked about, right? We talked about VIX puts in one of our videos. I don't know if I made it a YouTube video or a Discord exclusive, but regardless, one thing I talked about in one of my videos is that institutions are loading up VIX puts, the 21.5 puts. These were loaded at around when VIX was like at 24, and now you're seeing what's happening with the VIX. The VIX is dumping, right? SPY. This was crazy, right? I alerted to Discord members. Well, the bot alerted, and then I shared this with Discord members that institutions are in SPY calls 570 strike. Now, this was loaded when SPY, this was alerted when SPY was at like 562, right? And a lot of Discord members did take this play. We click on this link here, and I believe it tells you 291% profit. I don't know if you guys can see that part. Yeah, you guys actually can't see that part. But to the left, it shows that this play was at 291% profit. Is there a way to scroll over? No, it's not. So I do apologize. But yeah, crazy play right there. So yeah, that was very interesting. MSTR for 20 calls. MSTR is going crazy, straight to the moon. CCJ, this is crazy because me and a Discord member talked about this, and he is making an absolute bag off of it. Google calls, these were alerted yesterday, or Google calls. 165 calls, these were alerted yesterday as well. These are currently in profit. And then interesting enough, today we saw NVIDIA, someone loaded up NVIDIA puts 110 strike for May 16th. So plays are alerted all day, every day in the Discord. It doesn't necessarily always have to come from me. The Discord bot has your back when it comes to plays. All right, so if we look at the winners tab, again, beautiful day for the Discord members. We talked about Tesla. Institutions were loading up 300 calls for Tesla. We look at quant data here, and let's see if I can find those calls, because there was a lot of calls coming in for Tesla here. Let me see if I can find them. Bear with me. So yeah, right here, we saw 300 calls just flooding the gates for Tesla right here. June 6th was the expiration. Then you had some positions get sold here. And then, as you guys can see, they were loaded at 281.33, and then you saw more loaded at 283, 283.7, and you see Tesla pumped all the way to like 289, 290, and some Discord members did take that play. So congratulations if you took this play. So this guy right here, he made $580 off of that trade idea. This guy right here, he made $460 off my Meta call out. I called out Meta. I alerted Meta calls. So congratulations to you as well. He's also, I think he's fairly new, but regardless, he made profit off of that. This guy right here, he made profit as well. So beautiful day once again for the Discord members. It's all about taking initiative here. This guy right here, we talked about some nuclear stocks as well. LEU, I gave him some targets. He asked for targets. I gave him targets. He played them, and he came out and made 100% profit. All right, 100% profit. Right, I gave him a target of like 88 on this thing. The thing like pumped from like 84 to 89. So absolutely beautiful. That's what happens when you take initiative. That's what happens when you ask questions. All right. and you don't just trade blindly and then get mad at the world when you don't ask questions or anything like that. This guy right here, he took a different position on the Tesla calls. He took 277.5 calls on Tesla. He made $2,000 off the play. Congratulations to you. Yeah, absolutely killed it. But again, when you join the Discord, you have to take initiative. You have to ask questions and things like that. This is not a Discord where I babysit. I'm not here to teach new people how to trade or anything like that. Sure, you can ask questions. I'm always going to answer questions, but I'm not giving out classes and all that fun stuff. This is for us to have a community, for us to be confident in trading, for us to ask questions. If you have an idea, I can jump on quant data. I can jump on an options flow and let you guys know what whales are doing, and then I can give you my thoughts on a play. So that's how this Discord works. All right, it's all about building confidence, because 5 years from now you should be able to trade on your own, make decisions on your own, and not be able to depend on a Discord host. Now, by all means, stay in the community if you want to be part of a community, but I believe that no one should trade alone. I think trading by yourself causes a lot of issues. One, you tend to revenge trade a lot, right? A lot of people revenge trade, they get very emotional and things like that. And two, you're able to laugh off things. So, unless you're like in the trenches, like you're just ready to get evicted out your crib or something like that, then ain't nothing funny, okay? But ultimately, you want to be able to just have fun while trading. And I think the best way to do that is trading with a community. All right, whether it's my community, whether it's another community, whether it's your own community, regardless, I think the best way to trade is trading with others with like-minded set. What am I trying to say? With the same mindset. All right. So yeah, just malfunctioning there. I just turned into a whole NPC, but that is the idea. If you want to join the Discord, link is in the description below. But that's pretty much my thoughts in regards to today. If we look at the VIX real quick, a lot of you are asking me, or a lot of Discord members are asking me, when am I going to average in on puts when it comes to our July strike and our June strikes? I mean, not strikes, expirations. Right now, I'm not guaranteeing this is going to happen, but if we're considering that institutions are loading up 21.5 puts and 21 strike puts, I imagine that the VIX is trying to go down here, all the way towards 20.37, 20.4, more or less. That's where I think the VIX is going to head towards if we are considering those puts are going to play out. And then from there, simultaneously, that's when I'm going to be loading up more puts. So for now, still holding my position, still holding my dollar cost averages. Right now, pretty much in hedges when it comes to puts. Yes, we are playing the upside. Like I said earlier, we've been alerting calls all week, mostly all week, and then any puts we got in, we just take profit. So today we got into Meta 630 calls. 630 strike calls at 4.00. We took profit at about 4.40, about $40 per contract. Nothing too crazy in regards to profit. It's a good thing we took profit because like an hour or two later, the market absolutely tanked. So yeah, it wasn't liking what the SPY and Qs were doing. They just kept hitting that 570 wall, and SPY just could not get above it. So ultimately, it was the best thing you can do was take profit. So you always want to pay attention to everything, guys. You don't want to pay attention to just one stock. You want to pay attention to what the SPY and triple Qs is doing. So Meta can look bullish all day, but it doesn't matter if the SPY and triple Qs do not look bullish. All right, so hopefully you got something out of that. But that's all I have for this video. Again, when it comes to the VIX, in case I didn't make it clear, if the VIX is heading toward or is going to be in the money when it comes to those 21 strike puts, I imagine it's going to try to head all the way towards 20.37. I'm not guaranteeing this is going to happen. It's just something that I'm looking out for. That way I can add into my long-term puts when it comes to the SPY. Right now, we're pretty much hedging. Another thing, guys, a lot of you, some of you like tease other traders and things like that for being red or things like that. Here's how you should not be trading with more than 10% of your account. Right, majority of my account is in investing long term. I have Uber shares, I have Apple shares, I have Google shares, I have Amazon shares, I have SOXL shares, which we're probably going to take profit on soon. But I have shares for long term, right? And then I trade a very small portion of my portfolio, very small portion of my portfolio. So when you think I'm red, I'm actually not red, right? Because the market is going up and my shares are all green, right? So just wanted to put that out there. So anyone who is saying you're red or anything like that, or teasing you in the comments and things like that, one, just ignore them. Two, they don't know what they're talking about. And three, you should not be trading anything over 10% of your account. I get it. everyone isn't like balling or has the collateral for that. But ideally, once you get to a place of financial stability when it comes to your trading and your investing, you definitely want to trade a lot less with your account. And then if you blow, let's say, $2,000 out of, I don't know, $20,000 or whatever the case may be, then, put your next paycheck in and do it all over again. Do it how you want, but ultimately you should not be trading a huge portion of your account. That's how I always stay green. That's how no one can ever catch me up and be like, oh, you're in red or your account's net. Like, no one can ever catch me up on that. All right. Because that is hedging. That is what institutions do. That is how they hedge. They buy shares, they have calls, they have puts. They most likely are never red. Okay, they may lose a play, but ultimately, I guarantee they're probably green on another play, or they're green on their shares. So, just thought that was something to put out when you guys tease and talk crap about institutions being red. Chances are they're more green than you will ever be. So that's my thoughts. Until the next video, traders, have a good one.